is officially 8:33, and I'm calling to order the Financial Audit Advisory Committee of September 18th. So today we have 4 people who are remote. Carlin Reed, who I first want to announce, is our official Finance Committee liaison to this committee. That was a request from last week. We have Bianca, Cynthia, and Brian Watson remote. So I'm going to start actually with introductions. So I'm Wendy Ravelli. I'm your chair and your select board appointee. Don, have you introduced yourself?
Former school department personnel and citizen.
Okay, I know you know something. We'll just go quickly around the room. Okay.
Scott McIntyre from Markham.
Okay.
Court Booth, former school department.
Okay.
Colleen Reinhardt, Deputy Treasurer.
Rich Lloyd, Town Accountant.
Liz Rohr, Assistant CFO. Okay, and Bianca? Oh, you're going to unmute all of them. Yeah, just. Bianca, can you hear us?
There we go. All right, now, can you hear me now?
Yes, we can. Thank you.
Okay, good. Since CMLP's audit isn't going to be done today, I figured I would just listen in and, with my camera off and be in the background, if that's okay. Or depending on, you tell me how you want me to proceed.
If you, that's fine. You can do that. We will have some votes, so I would expect you to still participate as we need to.
Okay, yeah, absolutely, yes.
And then, and so Bianca is the CMLP representative to committee. Cynthia?
Cynthia Rainey, school committee. We can't turn our cameras on.
And you can, you should be able to. That was a request by Bianca to not do that.
No, there's all I have is unmute. There we go.
Yeah, actually, I think we haven't been promoted to panelists.
Yep, I just got it.
Yeah, we're doing it right
All right.
Okay.
Okay, there we go.
Yes.
Yeah, I'm all set.
Okay.
Thanks.
All right, so Cynthia, you are the representative for the Concord Public Schools, correct?
Correct.
Okay, and then Brian?
Good morning, Brian Watterson, Regional School Committee.
Okay, great. And then Carlin, as I mentioned, is our Finance Committee liaison. All right, so just a quick comment here to get started. You'll note that we expected to review the Concord Municipal Life Plan audit today. We are not going to do that. We will defer that to our next meeting. At our last agenda item, we will decide when that meeting will be. Okay, so first item on the agenda are the minutes from our last meeting. Did people get a chance to review those minutes? And do you have comments?
I took a look at it and it looked fine to me.
Okay.
Yeah, I would move to accept.
Okay, I have a couple edits to these minutes. I can go through them. There's several that I have, and some of them are minor, but some of them are just for clarification. I have a rule that says if you pick up a document, you should understand everything about it. So there's some references here to page numbers, but not what the document is that it's referencing. And I think where we say, look at the last sentence in the document, I'd rather see the sentence in there. So I actually am going to request that we defer these minutes. I'd like to put these edits in and we'll review them at our next meeting. Nothing is substantial, but I want to make sure that they're clean and clear. Is that fair? Yes. Okay. We can send this as a red line version out to the committee following. Okay, that'd be great. So I'll take the lead. I need a word version and I'll make the edits. Okay. So that's great. We'll plan to do that. Okay. So next up, actually, what I should say, are there any public comments? Or I know we have a new member of the public here today, or you staff member.
Is this the chair breakfast?
No, chair's breakfast is actually at the top of the stairs to the right. Correct. Okay. And nobody else outside of Carlin is on the correct. Okay.
Yep.
Okay, so to skip over that, so there's no public comments. All right, so let's jump right into the audits. I know that everyone, this is the FY 23 Concord Carlisle Regional School District audit. Scott McIntyre is going to walk us through that audit. The full, I don't know, Scott, if you saw the package, but the full audit itself has been distributed to the group. So
I did see that.
okay, great. All right, let you proceed.
Thanks. Good morning, everyone. As I did some introductions, but again, my name is Scott McIntyre. I'm one of the partners at Markham, responsible for overseeing. I was here just a few weeks ago with the town audit. Here today to discuss these regional school districts audit, and probably be back in a couple of weeks to discuss CMLP. I do apologize. I needed to be off a couple of days last week, and me being able to finalize that audit, but it is essentially ready to go. And look forward to coming back in a couple of weeks. I think as I did a couple of weeks ago with the town, what I like to start with is what we call a governance letter, and then we'll get into the financial statements. In our opinion, the most important communication to a committee like this is the governance letter. And to call it a governance letter it's just a term that's evolved. Our professional auditing standards require us to report these issues to, quote, those charged with governance. And I guess because of that phrase, it's easier for us to just call it a governance letter. A lot of it goes to the governing body. And this, I'm familiar with the process here in Concord, and after this meeting, the committee puts together a communication to go. A couple of weeks ago, I think we put one together for the select board, one to go to the school committee. So this is the communication that ultimately will make its way to the committee, but it's done through the Financial Advisory Audit Committee. Again, this is probably the most important communication because it tells you about the process, professional auditing standards that we followed. There's two sets of them. And really how the audit went. And if I can just quickly walk through it a little bit. After the first paragraph, it talks about our responsibility. It tells you that we follow U.S. generally accepted auditing standards, government auditing standards, and OMB, which is the Office of Management and Budget Uniform Guidance. Those are the three guiding principles that, or practices that, or standards is the word I'm looking for, that we followed. There's a slight difference between government auditing standards and generally accepted auditing standards. I can get into that if anyone really would like to understand the differences. Over on the second page, it talks about our plan, timing, and scope. Then it has a couple of bullet items that are listed there. And it indicates that we have identified the following significant risks of material misstatement as part of our audit planning. And it lists management override of controls and improper revenue recognition. Improper revenue recognition more specifically is in the improper period. Pretty sure I said this a few weeks ago when I was here for the town, but while we identified those as risks, those are essentially, there's never any absolutes in auditing, but essentially identified as significant risks in every audit that occurs, whether it be in the governmental environment, nonprofit organization environment, private companies, or even publicly traded companies. These risks are essentially mandatory based on the standards. And what that indicates is we need to design our auditing procedures and test as if there's a significant risk out there so that we can come to the ultimate conclusions, which we did. And I'll talk about it more in a minute, but that in our opinion, the financial statements are materially fairly presented. Below those two bullet items, it talks about some significant auditing matters on the qualitative aspects of accounting practices. The fancy way of saying that your financial statements include a number of estimates. Some of those estimates are listed at the top of the next page, including the estimated useful lives of your capital assets, your net pension liability, your net OPEB liability, and there's some related accounts for those called deferred inflows of resources and deferred outflows of resources. Those are all significant estimates. They are based on actuarial standards. And we have, as part of our audit process, looked at the assumptions that go into those estimated liabilities. And in our opinion, those assumptions are very consistent with other organizations in both the Commonwealth and across the country. So, and after that, some of the things that are always important to talk about, towards the bottom of page 3, the difficulties encountered in performing the audit. It's a nice short sentence. Basically, it says we did not identify any difficulties as a result of performing our procedures. And of course, it talks about independence. We are independent of the school district. And a new thing, that relatively new thing that we need to disclose during this communication talks about non-auditing services. With the school district, as we did with the town, CMLP, and virtually every other organization that we audit in the Commonwealth of Massachusetts, we assist the district in preparing the ultimate financial statements. It's all based on the books and records and underlying accounting records that the district maintains. But in terms of putting together the general fund balance sheet and statement of revenues and expenditures, the other major funds, and then consolidating most of your funds to what we call the long-term perspective financial statements is a process that we, the auditors, do. And technically, that's considered a non-audit service. And as a result, our professional standards require that I tell you that. So I've just checked the box on that. And over at the top of the next page, it talks about corrected and uncorrected misstatements. No significant adjustments that were necessary. Attached to the back of this letter, you do see a number of journal entries on very similar to the communication I made a few weeks ago with the town. Those are really financial statement presentation entries. The school district, like the town, is required to keep their books and records in accordance with the guidelines promulgated by the Massachusetts Department of Revenue Division of Local Services. They differ slightly from GAAP. For example, stabilization, the state of Massachusetts requires that those funds be maintained separately from the general fund, but generally accepted accounting principles require that they be consolidated with your general fund because that's really where the money, the original revenue was generated. Disagreements with management, again, a nice short paragraph. There were none, and no other consultations that we are aware of with other accountants. So that's what we call our governance letter. Again, we use that as sort of a generic terminology because, again, what I've just communicated to you is required by our professional standards to be communicated to those charged with governance. Over onto the financial statements, though, certainly the larger two documents. I'm going to start on print page number 1. If you're online, just please look for, or if you have a PDF of it, please look for print page 1. It should be very noticeable as it is on Markham letterhead. It goes on for a couple of pages, but the way we look at this is based on the auditing standards that we follow. As I indicated, we follow the United States generally accepted auditing standards as well as generally accepted government auditing standards. And based on the procedures that we've performed in accordance with those standards, in our opinion, your financial statements are materially fairly presented in accordance with generally accepted accounting principles. You will notice, just much like the town's audit from a few weeks ago, when it talks about opinions, it's all actually multiple opinions. That's simply because you have multiple opinion units. The general fund is a standalone opinion because that's a major fund. You have a state grant fund that's a major fund. So there's a separate opinion on that fund as well. And then, of course, as I indicated earlier, when everything is consolidated and converted to the accrual basis of accounting, incorporating your capital assets, long-term debt, and longer-term liabilities like pension and OPEB, those are called the governmental activities. There's a separate opinion unit for that as well. So while it says opinions plural, that's proper because there are so many opinion units, but the overall conclusion is that in our opinion, your financial statements are materially fairly presented in accordance with generally accepted accounting principles. Following that is your MD&A. There's some really good information in here, particularly to go back to at a later point in time to understand why certain key account balances may have changed. If anyone's taking notes, I would pay particular attention to the bottom of page 8 and to the top of page 9. And maybe just make a note to go back to that to summarize some key things. But I'm going to walk through some of the actual balance sheets and operating statements. On page 11 and 12 is the school district's statement of net position, page 11 being the asset side of the equation, page 12 being the liabilities and net position. In our opinion, no communication about a local government's financial statements is complete without at least mentioning the pension issues and OPEB issues. So on the page 12, middle part of the page, top down, middle part, you see your net OPEB liability. Pardon me, I'll start with net pension liability first, excuse me. about $3.5 million, a liability as of June 30, 2023. The year before, that was about a $600,000 asset. It swung from being a net pension asset to being a net pension liability. The driving factor there is that liability, while in your June 30, 23 financial statements, is measured as of 12/31/22. And if you think back to that calendar 22, investment earnings for the plan here in Concord, as well as most plans throughout the Commonwealth of Massachusetts, they did not meet expectations. So while most governments had an increase in their liability, yours actually swung from a pension asset to a pension liability. I would want to point out that the Concord retirement system is about, as of the measurement dates, 12/31/22, about 87% funded. So I don't think there's a real concern there. Right below that is your net OPEB liability with an account balance of $7.9 million. A year ago, that liability had a balance of about $11 million, so almost a $3 million reduction in that liability. I would also want to point out that plan is about 64% funded, which would probably put you near the top of local governments in the Commonwealth of Massachusetts. I know some that are in the 80s and 90s funded, but 64% would put you in towards the top of all local governments in the Commonwealth of Massachusetts.
And Scott, when I look at that, it looks like were there changes and assumptions?
There were.
Okay.
One of the assumption changes was that the discount rate was 6.75. In the prior year, it was 6.5%. So the discount rate, or the estimated projection future earnings of the plan, increased from 6.5% to 6.75%. Obviously, I indicated earlier when we were talking about estimates in the financial statements, we looked at that, and being very upfront, we're seeing most discount rates stay the same. So it was a minor uptick in it. The one key account that I would just, again, this is not a concerning issue at all, but given the question, I'm going to point something out to the committee. It's just something to know about. And that is over on page 37. At the bottom of page 37, there's two columns of numbers. And the number that I'd like to draw your attention to is on the right-hand column, headed up as deferred inflows of resources, for 909. It's the net difference between the projected and actual OPEB investment earnings. It's basically zero.
Not on the same number. What's the hard copy?
Hard copy,
Oh,
page 37.
Yes. I think it's 39 in the copy. I don't know. I could be wrong, but I'm signing it on 39, I think.
And what the account that I'm pointing out here, and again, I'm pointing this out because the question was raised about assumption changes, and there was a slight uptick in the discount rate, the estimated discount rate. The account I'm pointing out is called the deferred inflows of resources related to investment earnings. It's $900, essentially zero. Why I point this out is this number represents the cumulative difference over the last 5 years of what actual investment earnings were compared to estimates. So the fact that it's essentially zero is a good sign. It's not as if your discount rate went from 6.5 to 6.75, and then all of a sudden you've got a $500,000 deferred outflow. That would be, no other way to say it, that would be less than favorable. That would be less than favorable. I was gonna say bad, but that would have been.
So that's a 5-year aggregated variance.
Yes.
Wow.
Yeah.
That's,
In general, it's a little bit more complicated than that, but
It's
that's,
small little here and there.
Yeah. and it usually does. But when these standards first came out, the more plans were using, 7.5, even 8%. And when those deferred amounts climb higher and higher, that's when auditors become nervous. So I get into some technical issues there based on the question, but I think it's important, Probably not something at a full school committee meeting that I would get into, or a select board meeting that I would get into. But I understand this committee likes to really understand the financial statements, so I thought it would be a good thing to point out.
Yep, that's great.
All right. That was back on page 12. It sort of wraps up, the things that I wanted to communicate to the committee on the longer term perspective financial statements. If I could turn your attention to print page 14, the prior pages that we were looking at a long-term perspective, this is the short-term perspective. And the focus here is in the first column of numbers, the general fund, and it's from the bottom up, the third number up from the bottom, your unassigned fund balance of $2,099,000, a little bit more than that, or I'll round it, you call it $2.1 million. A year ago, or the year prior, that account had a balance of 1.9 million. So about a $200,000 increase in that key account. Very stable fiscal year for the school district, and a very stable and solid 5%, slightly over the 5% threshold. But it's just about 5% of general fund operating expenditures that $2.1 million represents. Couple of other.
Yeah, that's a question. This is essentially the E&D fund.
This is essentially the E&D
You're
fund.
saying we went over the 5% threshold, which should trigger a recalculation of the assessments for both towns.
Yes, it should.
Which is a major undertaking. So,
I'm quite certain that did take place.
wow. Okay, thank you.
So can you just talk a little bit more about that, the reassessment of the towns?
So again, what?
So this question about if the unassigned, which is if it gets above that 5% threshold, but it triggers some assessment. And what is that reassessment? Is it just the allocation of
The general laws of the Commonwealth,
yeah,
I'm going to use some generic terms, essentially cap the E&D at 5%.
do that, yeah.
And then if it goes above there, essentially the amount that's above the 5%, and I'm talking fairly generically here, it essentially has to get, refunded to the member towns. That refund usually comes in reduced future assessment. It's not as if the district's cutting a check, but just for the next fiscal year, the assessments that get paid in are reduced based on the overage as 630.
So it's a prorated refund by virtue of the deduction of the assessment. And this is the equivalent of the town's free cash. Is that correct?
Right.
Yeah.
But it is, but it also, I don't know, maybe I just want to make sure that for Cynthia and Brian Botter, who are on the call representing schools, they understand this. And then Cynthia, I would assume that this is important as well. There might have been a discussion about this at the school committee about what this trigger is. And if Anthony was here, maybe he remembered too, but maybe this is something we can follow up separately. It sounds like I just want to make sure I understand it and that it happened. I don't remember it, but it's a good question.
I thought that the remediation required a much more painful exercise of the recalculation of tax bills. That was an impression from many years ago. Very happy to hear that it can be taken care of by going into the following year, and that's pretty straightforward.
I think it's far less cumbersome of a process than it was many years ago.
Okay.
Okay.
I have a
A couple of other
question.
accounts to point out.
Sorry, okay, so
sorry.
just stop for a second.
Okay.
Bianca, you have a question?
Yeah, sorry to interrupt. I said at the beginning I was going to keep quiet because this is not my audit, but I have a question. I just want to, as I'm following along, I see that this is, you said page 14, and I'm looking, page 14 for me reads the Concord Carlisle Regional School District balance sheet and governmental funds as of June 30th, 2023. Is that correct? Is that the page I'm supposed to be on?
Yes.
Okay. All right.
And yeah, Bianca, we're talking about the third row up from the bottom, the unassigned balance, specifically under general fund.
Okay. All right. Thank you.
I think we can proceed.
There's two other accounts on here that I'd like to point out, and that is the first one is the fourth number up from the bottom. That's called your assigned fund balance. with about slightly less than $1.3 million. That includes two things. One, about $1 million in encumbrances. Fiscal year 23 operating budget that was carried forward into fiscal year 24, and about $300,000 of E&D that was used again for fiscal year 2024. So those numbers were essentially spoken for, using very generic terms. They are called what we in the generally accepted accounting principles world call an assigned fund balance. And the other account that has some dollars in it, some significant dollars in it, is the restricted, with an account balance of $699,000. A couple of years ago, when the district issued some bonds, you received a bond premium with the issuance, and generally accepted accounting principles. Pardon me, let me withdraw that. Massachusetts general law is going to require you to use that premium. They don't allow it to drop into your E&D. They require you to use that to help reduce the assessments for debt service in future years. So that $699,000 is restricted. The Commonwealth of Massachusetts, an organization outside of the district, holds the constraints on what you can do with those dollars. You must use those to reduce future debt service. So that's why it's classified as a restricted fund balance. Just to give you a little flavor for the other things that are in this fund. So.
Scott, for me, is there a clock on that?
There is. My recollection is that gets amortized. I won't say straight line, but probably very close to straight line with the amortization of the bond issuance.
So it just follows it.
It's
Okay.
portions.
Thank you. In other words, the calculated bond, the allocated rate to the area.
Yes.
20-year one.
Yes. Probably a better way of describing it than I did, using acronym. The last page I'd like to turn to is all the way over on print page 55. This is, if the general fund balance sheet is and it is probably the most viewed statement out there. The general fund balance sheet is probably the first place most readers turn to. Your budget and actual comparative schedule, which again is on print page 55 of the district's financial statements. This is probably the second most frequently viewed page here. I'm going to focus very quickly on the final column. As it's titled up, it's the variance of the final budget, the variance of the actual amounts with the final budget. About a third of the way down the page, you see total revenues came in greater than the budget expected by $495,000. Most of that is driven by the investment earnings of the school district in fiscal year 23. The school district, like most organizations in the Commonwealth of Massachusetts, saw favorable interest revenue earnings compared to budget in fiscal year 23. A few more inches down the page, you see the total expenditures. The budget was underspent, and that includes the encumbrances that were recognized, that I spoke about earlier, by $155,000. So the combined total of the favorable revenues and the favorable expenditure performance of the district is your $651,000. Now, during the year, much like you did for fiscal 24, but for fiscal year 23, you also used $300,000 of your E&D. So you essentially expected that your outflows of resources were going to exceed your inflows of resources by that $300,000. And when E&D, much like it is with free cash, when it is used, you're expecting the outflows of resources to exceed the inflows. So, but the favorable results of operations on the revenue side and the expenditure side exceeded the use of E&D. So overall, the budgetary performance for the school district was in the lower right-hand corner here, a positive $351,000. With that positive 351, you think back to when we were talking about your unassigned fund balance of about 2.1 million. I indicated that it went up a couple $100,000. It's driven by this number in the lower right-hand corner of print page 55. It's not going to be exact because, as I indicated, some of the other fund balance numbers change as well. But it's always nice when the 351 on the budget versus active page is quite consistent with the $200,000 increase on your unassigned fund balance. It does try to connect the dots for most readers. Doesn't always work out that way, and I have a little more explaining to do, and that's the case. But in your case, the budgetary performance really is what drove change in the unassigned fund.
So I have a question on here, but remind me again, the original budget versus the final. The differences here, because I'm not accustomed to seeing such a large increase in the budget, and I'm trying to recall why. There would have been $1 million increase.
There,
700,000, maybe, you know. Oh, it's Bob's coming, but yeah.
I can answer.
Yeah, no, go ahead. Answer, Bob. Yeah.
Really, is the original budget is developed prior to the start of the fiscal year.
Yeah.
And another way of saying that is prior to the end of the current year that
Right, but it wasn't the town meeting approved original budget.
this first column was.
Yeah.
Then it probably includes things like state assessments and things
Yeah.
like
Okay,
that.
all right, so that's why.
But the major difference between the final budget, pardon me, the original budget and the final, is if you look in that final budget, the fourth number up at the bottom, prior year carry forwards of 675.
Yep.
Those were the June 30, 22 encumbrances that were honored in fiscal year 23. So encumbrances at the beginning of fiscal year 23 become part of the budget, to show that they would be authorized and available for expenditures, just like the original budget would be.
Okay. I was just kind of curious on the large capital, increase in the large capital outlay. And maybe that's a, but I understand the original to the final, because there are a lot of state resources that come into play, so.
And I don't recall the beginning of the year encumbrances.
Yeah.
But at 6/30/23, those encumbrances, the majority of those encumbrances dealt with capital outlay. So if that is consistent with the carry forwards of the encumbrances as of the beginning of this fiscal year, that would make sense that you would have a significant difference between the original budget, the final budget, and capital outlay.
Okay, great. Sounds.
That's really, if it was, I'll take one more minute, and go back towards the beginning of the report. I talked a little bit about your OPEB, liability. I'm going to talk about your OPEB liability. It's probably appropriate to point out the district's OPEB fund. If you look on print page 19, this is the statement of changes in the fiduciary plan net position. It's the middle column is your OPEB trust fund. That's really where the focus is. Third number up from the bottom, fund added to its net position by 1.469 or almost $1.5 million. About half of that is the cash contribution that the school district made in fiscal year 23. The other half coming from investment earnings. So as I indicated earlier, your net OPEB liability, use the term net, it's net of the resources you have set aside that are restricted for OPEB purposes. The net OPEB liability is your plan is approximately 64% funded. So, when we talk about funded, this was the last page I really wanted to point out to the committee. That is a super quick walkthrough of our audit. I talked about the governance letter, which I think is probably an even more important communication than walking through unassigned fund balance and budgeted actual results. It's really the communication that, again, our professional standards require us to make. I'll turn it back to the chair and try to answer any other questions that the committee may have.
Let me go just around. Does any other committee members have additional questions on the audits? You're fine. Brian or Cynthia, any additional questions?
I'm good, thank you.
Okay. And Bianca?
I do have a question on this, on page 19. Can you tell me what's the private purpose trust fund and the custodial fund?
Mm-hmm. Private purpose trust funds would be scholarships. And the custodial funds, I believe those are your student activity funds. If I'm wrong about that, I will let someone from the town know to communicate it, but I'm quite certain the custodial funds are the district student activity.
There's also,
facilities fees we charge to third parties that go through that fund. So we pay their salary out of there and then we take the fees and apply it there. The actual building rental fees go to the town, but the overtime usage we net out so that we're not paying those expenses and not having any revenue offset it. So it flows through that account.
That's true, years, correct?
Right, on the region side, that's true, that's on CPS on the region side. Custodial fees have been flowing through that fund in the past. This is FY 23, and we created the revolving fund in FY 24. So in FY 24, it's going to flow through a different.
Wendy, if I might,
Yes,
with our revolving funds, I know in the past, year to year, the auditor would often, John, you may help me here, would single out a particular revolving fund or cash account that was off budget for independent scrutiny or special scrutiny. Are you still doing that?
I think we do. I would be honest, we had Sarah Kordak was really overseeing this engagement this year, as well as Nicole Ducharme. That's probably something I should have been prepared to discuss today, but I do not know if there's a fund, which fund I probably looked at this year.
Okay.
so,
Let's call it the revolving accounts or the off-budget accounts. The auditor in my years with the school district would single out a particular account in a given year and say, we're going to drill down on that one and take a close look to check practices.
Okay.
For example, the question would be, can you track a dollar that comes in from a citizen all the way through and out the other end and do the forensics on that? That was the exercise that I was taking through, for example.
Right.
yeah, and I think it's important because these custodial funds are not required to be reported elsewhere.
Exactly.
So one of the
That's-
questions I had was to understand how they are in fact actually audited within the audit. So are we sampling each one of those to make sure that the revenue is received and the outgoing is associated with those sorts of, it's not a restricted, they're not restricted, but there are different accounts for different purposes, whether it's athletics or it's,
I mean, they still go across Bob's desk and they still go through the school committee.
Right.
But by the time that happens, the detail is lost.
right, but they're audited.
And you would go back to minute $1, $1 coming in and track it with these off-budget inflows.
We would call it basically a walkthrough.
Thank you, yeah.
So is there a question about, you said it seemed like in prior audits, there was a deep dive on a particular one. Is that what you were?
Yeah, because it's a lot of work. And so, I don't know, there's probably over a dozen of these accounts. And that's why periodically one would come up for the wall.
The three significant accounts are the adult education.
Let's kind of.
It's about 800,000, I think, that flows through it in a year. Facilities revolving funds new, I think we brought in about $52,000. This is FY 24, so we're talking about the 23 audit. And then the athletic revolving fund is about 400,000 that flows through. We don't necessarily match it fees directly to expenses. The fees collected are from students for athletics, and they'll pay for supplies, they pay for other expenses of the fund. Those are the three main funds. We have small funds, like very small funds, like a lost book fund. That's a couple of $1,000 that if somebody loses a book, we buy a replacement book. So while I have the floor, I'm sorry, I mixed up my 8:30 and 9:30 appointments. I'm the assistant superintendent of finance for the years, but.
Sorry, Bob, I should introduce you when you first came in the door. It's somewhat related, just to follow up on that. So I was wondering about how adult ed, is everything in the adult ed program in that education line? And there was another one that was like lectures and I can't remember the name of it.
Enrichment?
Enrichment, yeah. Is that associated with the adult ed program or is that?
It's not, it's a separate, donation that was made. So it's in a trust fund.
Okay,
And it basically pays for lectures by faculty, to give to students and, other staff. They get a stipend.
okay,
But it's a specific purpose. It's only for that purpose, and we get a handful of speakers every year. So that's what that fund is. That's one of the larger trust funds. I think it has.
Yeah, it was.
Close to six figures, around six figures.
It's like the adult.
And it's been in place for a while. Is that
Yeah.
Rudiger or something? Yeah, it's got.
Rutgers.
Rutgers.
Okay.
R-U-E-T-T-G-E-R.
Something, just don't forget, John. Yeah. So I had some other questions as I went through this. How about and I assume that leases, that we're still for buses, they are leased to own? Is that still true? of your leasing?
Correct. I think that that's the current practice going back a few years.
Yeah,
At one point, I think the district got behind, I don't know if John was here at the time. We do have a lot of buses, and I know that some were purchased through a capital article at some point, maybe
Yeah,
7
it was
10 years ago.
but my question is really about how they handled in the finances. Is a lease an operating budget until such time you acquire them and then you start depreciating them? It's sort of a financial question.
So I'll defer to Scott on that. I would say from the district perspective, in terms of managing our budget,
Yeah,
we're responsible for the lease cost annually in
Yeah.
our operating budget.
Yeah.
And then we have to do some junk to get it in the financial statements the right way to capitalize the leases, which Scott can probably explain better.
so the leases are capitalized.
Yes,
Didn't know where they got.
there's, a couple of years ago, there was a new lease standard and it
Oh,
follows
okay.
not just governmental accounting, a new lease standard and, but by and large, even if a contract says it's a lease,
Yeah.
it may not qualify as a lease for governmental reporting purposes, but that doesn't mean they're not in here.
Yeah,
If
yeah.
you were to look, again, just to, I know, I'm going to a lot of pages. Page 32 shows some changes in your long-term debt. You know, you have your public offerings, which are your bonds payable. Right below that are your loans. I do believe those loans are the least payable, if you will.
Okay. All right.
And the assets are, of course, with your capital assets.
Okay. I was just sort of curious. I was looking at, there was a big increase in fixed assets and I didn't know what drove that in 23, but it may be that, I mean, if it's an increase in, let me go back and ask the question. So where did I come from this one? Fixed charges actually increased. So in your summary pages on, on page 7, the fixed charges increased 24% between 22 and 23. And I just didn't, part of it was trying to figure out what that was. I was guessing it might have been a budget, something else that would increase that. We didn't reclassify anything.
I am happy to look into that. I do not know that level of detail off the top. I would want to point out that this is your governmental activities. This is the
Yep.
long-term perspective or
Yep.
pool-based statements. It could be that significant changes to, there wasn't much of a change. There was somewhat of a change in both pension and OPEB. The expense could be factored in there, but
Okay.
I'll happily look that up for you. I don't have that level of detail at my fingertips.
And then, maybe you know this, under the operating grants and contributions, it's like 4 million in fixed charges. What does that represent?
Operating grants would likely be the ones that I can think of are the state and federal.
Yeah.
The IDEA is a special ed grant. It's about between 400,000 and 500,000.
Yeah.
Circuit breaker.
Chapter 70.
Okay, so that we'll report that as a grant. It's general fund in our financial system, general fund revenue, but I think for financial statement purposes, it's considered a grant.
Okay.
So there are some differences, I would say, between how we operate and run our municipal budget versus what we're required to do for financial statements.
Yeah, yeah.
So then regional transportation reimbursement revenue must be in there as well.
Yes, sir.
Okay. Just was curious on what fixed charges would be, but that's okay.
You get about $2 million in Chapter 70 revenue and about 700 to 800,000 Chapter 74 transportation revenue.
Yeah, and this, it gets class on page 13, it gets all, all the grants and contributions of, 7.9 million and get broken down into categories and just, there was a big chunk of fix. I was it just surprised me, but I don't know all the details of what's in there, so it is. And then the other question I had, maybe it was on page 19, I'm just curious, on custodial fund, which I know that this is sort of the fees that you collect. There was no sort of interest or investment income captured under that fund. And I just don't, is it just because there's so much churning of cash in and out?
That's a great question. I'm happy to look into whether or not the number above the interest income row there of 304,691. That may include some interest, and maybe I didn't put it in the right, what we call a group. The financial statements are prepared. Happy to look into that.
Okay, that'd be great. All right.
I have a question that follows on to what Wendy was asking about the long-term debt. And I know the new, Ellen Garrison building from the, Concord Middle School. So we have 3 buildings and 2 of them are going to get torn down and we have new building come up. And I believe that was there was quite I think it was something like north of 100 million, but that doesn't show up here. Is that part of the town's debt? Or is,
Yeah,
That's on the
Okay.
downside.
yeah, it would have been, yeah,
okay.
it's going to be in the town audit.
Okay. Thank you.
Well, I'm wondering if you can just follow up on something we started to discuss before you came. And part of it is, and Charles, is your earlier question. So back in 20, I guess in 20, we were looking at the, well, this is the unrestricted fund balance for the government funds, and it was roughly 2 million FY23. And so John identified that when we go above that 5% threshold, there needs to be redistribution, and I guess we can do it in subsequent fiscal years. So as we went into FY24, the assumption is that we do that distribution from 2 million down to 5%. And I just wanted to ask you, did we do that? Was it presented to the school committee?
So we're not above 5%.
Okay.
The DOR process to review E&D includes offsets. So if you have deficits, they offset it against your unassigned fund balance. So for example, we had a deficit related to Minuteman Neshoba Health Group receivable. We had some student activity funds with deficits. We had some grants that the revenue was received the following year. So that's like a temporary offset.
Okay.
So we ended up at about 4.6% in FY23. In FY24, I think we'll be very close, although you're familiar with the town exiting the Minuteman Health Group.
Yes, yeah.
So we had a $355 hit. We didn't have an insurance reserve fund.
Yes.
It's nice to have those reserve funds. We had to take it from E&D. So that's going to draw down our E&D. We have an offsetting increase. I heard you referring to capital and the encumbrances earlier. We had set aside $421,000 for a capital project to pave the access road, and it might have smoothed the road that we didn't need to use all that. The capital project came in a couple $100,000 less than we planned, and the piece that we didn't spend was the amount in the capital stabilization and in the amount that we had encumbered. So between the two of those, some of that savings back to E&D. So I'm projecting that we're going to come out pretty close to 5%, but I think below it again this year.
Yeah.
But it's also subject to DOR. They have a whole host of technical things they look at. And even if we have a deficit that we'll collect, if it's not collected within a certain time, it's a temporary offset. It's similar to the free cash certification process. They might have certain offsets. So if we went over 5%, we'd have to offset it against our assessments. Probably that's the way I would do it is, if you had an assessment of 10 million, we'd do 9.9 million if we had $100,000 excess. So that would be the mechanics of how I would do it.
Yeah.
We talked with Anthony and the town on that if it happened, but our E&D certification for FY24, it's due October 31st. So we haven't started the process of reporting that yet. But kind of been looking at the numbers, we think will be below 5%, but getting a little closer.
Yeah.
Which is a good position for us to be, we think.
No, that's great. Helpful for the explanation. We thought it was over 5%, and I'm like, I don't remember any reallocation, but to your point, there's a lot of details.
I had forgotten that for this.
Yeah.
Again, before Bob got here, I talked about some of the differences between the way the Department of Revenue does things and GAAP, that really accounts for the differences.
It's the DOR certification, which is really governing this whole thing. And also, I guess there's been a change in the methodology 7 or 8 years ago, where I thought they had to recalculate the assessments and reissue the tax bills. And that's the way I came up through back in 2003 for many years. That was the understanding why we had to be very precise in making sure we stayed under the 5%. But if you can do it in the following year, it's much less onerous.
Yeah.
So you handle it perfectly.
That's the way that's the guidance I received from DOR in my prior district. And I don't think anything's changed. It seems a lot easier mechanically to do it that way.
It sure does.
Not that the state makes everything easy, but in this one, I think that we'll do what's easiest. I would certainly, if we get to that point, I would certainly ask them and run it by them.
Yeah. No, I mean, you know what, it's gonna run on top of the fund concerns as well, so no concerns there. So, but thank you for that clarification. Okay, so I think we're done with the review of the audit. I'm just going to note that in our last meeting, we reviewed the town audit. We did not vote to accept the audit. I'm going to get back to that in a minute, but Court, did you have a question?
Just a question for Scott. Are there recommendations that you want to review today?
No, we did not issue a management letter, the governance letter. Had we identified anything we call a significant deficiency or material weakness, it would have been in there.
Got it. Thank you.
Excellent clarification. What's the difference between the governance letter and the
Governance letter is required by our professional standards. I think I mentioned this before you came in, Bob, and me and my profession call it a governance letter because it's what we're required to report to those charged with governance. Management letter is designed to report any other control deficiencies that don't reach the level of a significant deficiency of material weakness. That's the difference.
We didn't have, so yeah, that's helpful to know because I thought one replaced the other. Very good.
There's always confusion over the differences in this term.
Standards change, our standards change all the time, just like the accounting ones do, auditing standards do as well.
Yeah, they do. So, all right. So with that, now we've completed a full review of the regional audit. I would like to entertain a motion to accept the audit from the committee as stated.
So moved.
Second, great. So I'm gonna have to take a roll call on this. So I'll go around the John, Bruce, Bort, Brittany.
My ex officio on the committee?
You know what? These are the committee members of the voting. The voting members on the financial audit committee vote. You know, yours a little bit. Bianca?
Yes.
Brian?
Aye.
Cynthia?
Yes.
And myself, Wendy. So that's, yes, so full unanimous support. Ultimately, we will also create a letter now to the school committee summarizing the results of this audit. We continue to summarize because it's been very good, which is great. We will draft that letter. We'll draft that letter for you departments. But next on our agenda, we had the CMLP audit. We're not going to have that today. But I would like to now look at the letter that was drafted in regards to the town's audit. You all have that in your package. It's a letter from the Financial Audit Advisory Committee to the Select Board.
Page 88 on the PDF.
Thank you, because I want to scroll that. I know. So let me just comment on what this letter is. It is following as drafted, what's traditionally been done in the past around all the audits. It starts with a general introduction of sort of the role responsibilities of the financial structures of the town. It speaks to the duties of the financial audit committee. And then it speaks to two things that we typically summarize. Generally, sort of issues from the audit that are identified. Often these are control issues that are shown in the management letter, which for the region, there were none. For the town, there have been several. And what's captured under the audit process and management letter from the town, for the most part, outside of some introduction, it clearly says there's a clean audit, but it does identify those control issues that have occurred in the current audit. And I've also noted when those audit issues were from prior audits as well. And I'll just remind everyone that there's been a lot of turnover in both the town management and the finance office, as well as the region. So some of these issues, I think Anthony is not here, but the finance team is committed to addressing these issues by the end of FY25, pretty much across the board. So I'll leave it that these pretty much are cut and pasted from the actual management letter itself. Nothing was really altered from here. So I don't, people have additional comments on this letter, anything else that you want to highlight? There is an opportunity in these letters for the financial audit committee to call out other issues that we might want to bring to the attention of the town, in this case for the letter, or other entities. And that's what that second issue is in the letter. In the past, I'll give you just one example. For the light plant many years ago, in reviewing the audit, there were some very large not encumbrances, but the unrestricted funds were quite large many years ago. And it prompted a discussion of, well, why is there so much money? And we had many funds. And there was a question of, is there too much in those funds? And it prompted a request by the finance from the audit committee to the light board to review and evaluate those various funds and set some policies around how much you want to collect and for how often. That wasn't necessarily an audit issue, but it became an issue that came out of the course of discussion. So we've had some issues that we've discussed here. I don't think any of the things that we talked today from the region's perspective come to that, necessitated that. And that was true, I think, in the town as well. Nothing unusual. So with that, are there any comments on this letter? Any changes people would like to make as it relates to the town letter? Priyanka or Brian or Cynthia, any comments on this letter? Concerns?
No, Wendy, it looks great. You'll review this at the next select board meeting. Is that accurate?
That is the intention, although not actually the next one. It'll probably be the one after because I'm not here for Monday's meeting.
So the process is, do they need to accept it or vote to accept it, or what is just a review? What's the?
We need to vote and accept.
That's right.
I will present it for discussion at a subsequent select board meeting, and I'll report back any comments or feedback that I won't probably not expect much. And Anthony will be at that meeting as well. So I'd like to.
So Wendy, at some point, can you send this on to the school committee whenever you think it's appropriate after your review with the select board?
Yes.
Or to the chairs of the school committee, of the Concord School Committee, what have you?
Yes, I can certainly CC them because the CPS was involved as part of this audit, so that makes complete sense. And Bob as well. Bob's seen this as well.
Yep,
So,
thank you.
all right, I would like to entertain a motion to accept this letter as drafted. That's a.
So moved.
Okay, so I have a first by Bruce, a second by Court. I'll just take roll call.
I would just,
Yep.
I would just note that, I was pleased with the management responses. I think they invite follow-up, maybe even before the end of the current fiscal year to see what movement is happening.
Yeah,
Some of these are very specific in terms of responses, others are, we'll look into it.
yeah, right. I think as part of any of the subsequent audits, that's part of what Scott and his team will do with Anthony to follow up on these specific topics. So, yeah, some of them may not, like the Munis implementation. I don't know if it'll be complete by the end of FY25, but significant strides should be made by that time. So, but thank you, Court. That's good. All right, we have a first and second. So I'm going to do roll call. Accept?
Yes.
Bruce?
Aye.
Okay, Brittany, Bianca,
Yes.
Cynthia,
Aye.
and Brian.
Aye.
And myself, Wendy. So thank you for that. All accepted. Okay, so our last agenda item is to set our next meeting date. For our next meeting, we'll be reviewing the light plant audit. Jason was here earlier today, and we were able to coordinate some recommendation for a date between Jason's availability and Scott's. We're looking at October 9th. And so I'll ask people if that date works for all of you, or if it doesn't. Do you all have your calendars with you?
Yeah. We have a Concord Light Plant board meeting on the 9th.
Yes. Yeah, details here. So what Jason suggested doing it at 10 o'clock,
Okay.
following the light plant meeting. October 9th at 10 o'clock. Works for John, Bruce, that would.
I'll make it work.
Okay, great.
And would that be for an hour, hour and a half, or?
I would say it's probably an hour.
Okay.
One big mistake. Yeah, probably an hour. Mhm.
Okay.
Okay. I think seems like it works for everybody. Cynthia, Cynthia and Brian, I know it's not your audit, but we always welcome your participation, of course. Work for you?
I will do my best to jump
Okay.
on Zoom and be part of it.
Great, thank you. Appreciate it, Brian. Cynthia, you're all set with that? All right, well.
Sorry about that. Yes.
All right, we'll confirm for the next meeting, October 9th at 10 o'clock. I have an action item to sort of redline my edits from the minutes from our last meeting, and we'll get that distributed to the group shortly. And we'll get the CMLP audit out to everyone as soon as that's ready. And I'll also be drafting the other letter for the region, and we'll be looking at that letter next time as well. Great, and so I think we can adjourn. I'll take a motion to adjourn. First, moved. And I don't think that he's going to take a roll call vote to adjourn. All right, John, second. All right, let me just take a roll call. John. Bruce, aye. All right. Brittany, can we adjourn? Bianca.
Yeah. Yep.
Brian.
Aye.
Aye. And myself, aye. All right, thank you all very much. Appreciate it. All right.